name's Rebecca Harding. I'm the Chief Executive of Equant Analytics, which is a data supply company and analytics company looking at trade and trade finance globally. The outlook for 2017 is actually not quite as bleak as it was in 2016 or 2015. So we're looking at commodity prices picking up slightly. We're looking at global trade remaining roughly static. But that's actually quite a good news story when you look back at, say, the end of 2015 and into 2016. One of the underreported things was that actually trade fell back by 15% because of the collapse in commodity prices. Sanctions are an important part of the world of trade finance, and we can't look at 2017 without looking at where the sanctions issues are going to go. So I think at the moment we're looking at some big changes in Russia and the Middle East, and a lot of this is likely to be driven by US policy. So we're likely to see at least a review of sanctions towards Iran, and that's very unfortunate for trade finance, particularly for export credit agencies, but for the legal processes around trade finance, because people have been expecting a big boom in Iran for the last couple of years, and obviously that is a big break on what's going on. The other thing that we might well see is a loosening of sanctions with Russia. So again, this is a function of policy to a very large extent, but again, we don't know at the moment, and I think one of the biggest things about trade finance this year and trade this year is that we don't know. Hedge funds and actually some banks in trade finance are looking like they're fairly positive about commodity prices this year. I have to say that if I look at the trade data, then I'm not quite as positive as maybe the hedge funds might be. But the reason for that is because there's a very strong correlation between oil prices, for example, and world trade. That's almost a truism because oil prices are a very large part of the value of world trade. So almost totally correlated, sort of 96%. And because we're not seeing trade growth being that substantial this year, what we're likely to see is oil prices maybe stick around $53, $55 a barrel, but it's very unlikely that we'll shoot up to the $100 a barrel scenario that we saw immediately post-crisis, but oil prices may well stabilise. So if I were a delegate to this conference, I would be wanting to know, how do I continue business as usual in the light of all of this uncertainty that's out there? Is it risk? Or is it uncertainty? And how do I convert that uncertainty into something that I can manage, which is risk? Because there's a probability attached to risk. Uncertainty, nobody knows.